Hi, Jacklyn Saunders here with Dominion Lending Centers. This video is about the new rules that will be put in place on insured mortgages. So an insured mortgage is when you put less than 20% down. We call this type of mortgage high ratio. So if you are considering buying a home and you have 20% or more to use for a down payment, then this won't affect you at this moment. So the government states that these changes are to be put in place to support the long-term strength of the Canadian housing and mortgage markets and to promote the savings through home ownership. The new rules will take effect on July 9th, 2012, so this year. The new rules include the maximum amortization, which is the amount of time that it takes you to pay off your mortgage completely, has been reduced from 30 years to 25 years for insured mortgages only right now. So limiting the amortization period will reduce the interest payments you make on your mortgage. So it will help you build your equity in your home more quickly and pay off your mortgage sooner. The decrease will result in a mortgage payment increase. So over the life of the mortgage, this increase will result in quite a substantial reduction in total interest payments, meaning that more of your money goes towards the principal of the mortgage rather than the interest. So your payments will be higher, but over the length of your mortgage, you'll pay it off faster. So another change is in regard to refinancing. So the limit has been decreased from 85% of your home's value to 80%. So if you wanted to refinance and take out equity for renovation, school, whichever, you now can go up to 80% of your home's value as opposed to the 85%. Okay, so the government is also limiting what we call the gross debt service ratio and the total debt service ratio. So these are calculations that brokers and banks use to determine how much more that you can actually afford. So the GDS ratio is your household income needed to pay for the mortgage, your heating, and your property taxes. The TDS ratio is your income and all other debt obligations such as car loans, credit cards, and lines of credit. So the government is reducing these ratios to basically prevent everyone from overextending themselves and to decrease your exposure to an increase in rates should they rise. So another rule that will be put in place is insured mortgages are now only available on purchases with a price of less than $1 million. So a down payment of at least 20% will now be required on loans for home prices above that $1 million mark. But remember, you do have until July 9th to refinance up to 85% or buy your first home with a solid purchase contract in place and amortize up using that 30 years, as mentioned before. So if you want to know the details about how applications are affected, if your mortgage is up for renewal and you're not sure how it's going to affect you in your specific situation, please do contact me. I've got all the info and the details on these new rules. This video is just the basics. So my contact information is listed below. Thank you very much for watching.